Dave, welcome back. We are excited to have you back once again. It feels like we just had you on there recently, but I think it's because we've been talking about you so much. But Dave Zook is a successful business owner, and he's an experienced real estate investor. And I believe that you've acquired, $350 million in real estate since about 2010. Is that right?
More than that, but that's close enough for now.
That's what's published. Well,
Yeah.
Appreciate you having on today. What we're going to be talking about is we're going to be talking about some car washes and kind of the fun and stuff that you've kind of brought to attentions to some other investors, and that's why we invited you back today. But Dave, kind of this car wash investment opportunities off the beaten path, man. How did you first get introduced to this niche?
Well, that is a long story, but I'll try and break it down to keep it fairly short. So I do quite a bit of consulting, advising, tax planning, business, kind of consulting, and I really don't even offer it as a service, as a paid service. I offer it to a lot of our investors. They're going through a liquidity event, some kind of event. Oftentimes they're selling a dental practice, they're selling something, they're selling part of their business. In fact, just this morning, a few hours ago, I was on with what looked like a 20-something kid. He might have been high 20s, but he sold 30% of his business for $42 million. And so he's calling me. He got introduced to me by one of a good friend of mine, and he's calling me saying, "Hey, I sold the business. I'm looking at a potential $8 million tax bill this year." And so I have a lot of those kind of conversations. Well, one of my investors, actually a dear friend of mine, who's now on, who had been on my advisory team, who's now a partner of mine. He reached out to me and said, "Hey, my son-in-law and his friend are looking to start a business. Could you look over this kind of business plan and the numbers with us and kind of give us your take on it?" And so I did. I looked at this business deal. Cash flow numbers looked amazing. It was a Tommy's Car Wash, and I never heard of Tommy's Car Wash. This was 2 or 3 years ago. I mean, you could have told me Bob's Hotel, and it wouldn't have meant any more or less than Tommy's Car Wash. And so I looked over the numbers, and it looked amazing. It's like, but I'm thinking to myself, I mean, you can make an Excel spreadsheet say whatever you want it to say. So, but still, I'm looking over the numbers, and it's like, yeah, it looks viable. I mean, it's a high volume business. If you can get the volume, you can get the numbers. Yeah, this will work. And so I sort of got off the call and I sort of shelved that. And then it was probably 4 or 6 weeks later, got on a call with an investor of mine in Kansas. And I knew he had just built a car wash. So I said, "Hey, did you ever hear of Tommy's Car Wash?" And he was like, "Oh my goodness, I just built a Tommy's Car Wash." And he spent the next 20 minutes telling me how Tommy's Car Wash is the best business model on planet Earth. And so I was like, "Oh, okay, that's cool." And so I kind of shelved it again. I got enough of things going on. I wasn't really in the business to, I didn't think I had, an appetite for something else going on at the time. It was probably 4 to 6 weeks later, another investor of mine from the Midwest had invested with me a whole bunch of times. He said, "Hey," he called me. He said, "Hey, my son-in-law and his friend are starting this business. Could you take a look at this with us and, just kind of look over our shoulders and make sure that we're not missing something?" I was like, "Sure, I'll do it for you." "What is it?" And he said, it's Tommy's Car Wash." I'm like, "You got to be kidding me." I mean, this is like, I'd never heard of Tommy's Car Wash before. And in a matter of, 2 or 3 months, I'd heard about it from 3 different people who had asked my opinion about, the business. And so out of curiosity, so I took the call. So first I reached back out to my now business partner, lifelong friend and mentor. And I said, "Hey, you wouldn't believe this, but I got somebody else that wants to get into this business. Why don't you jump on the call with us? We'll entertain these guys for 15, 20 minutes. We'll see if their numbers, their story lines up with your son-in-law and his friend. And so that's how the whole thing started. And so we got on a call with these guys. We got off the call, and we were on the call with them for a half hour, 45 minutes. We got off the call. We're like, we called each other. We're like, oh my goodness, we kind of like these guys, and they think a lot like us, like in terms of business and how you treat employees and how you get business, how you market, how you run a business, all that stuff. We're like, wow, this is like those guys. We were like them like 20 years ago. And so that led to a few more conversations, and eventually they actually had PE money lined up. They were going down the private equity route. They had their private equity partners all picked out, and they were ready to roll. After 2 or 3 phone calls, we convinced them to quit dating the PE guys and go out with us. And so that's how it started. And of course, we now have 8 fully operational car washes, and we've got about 50 in some forms of either ownership, contract, development, coming out of the ground, excavation. So we got 8 in operations. We're actually on pace to build 60 in the next 4 years.
What makes these numbers so attractive?
So number one, it's a great company. It's a great family. We believe in we love their story, but the car wash business in general, number one, it's a needed, business model. When you look, there's less people washing their own cars, more people having their cars washed for them than any time in human history. And so is the business model viable? Is it a needed business in today's environment? The answer is yes. And now you take a really good product, and the Tommy's Car Wash, the business model, I love the business model in that it is built around today's sort of business philosophy. Like everybody's in a hurry. Right? Everybody's in a hurry. They're all doing their thing, whatever. So people don't want to stand in line. They don't want to wait in line. They don't want to, oftentimes, most times, they don't want you to, clean their interiors. They just want to ride around in a car that looks good. So the whole business model is volume. It's built on volume, and it's built in a way that you can pull off a busy street, easily access the car wash, and you can be back on the street in 2 to 3 minutes. That's the business model. And you can get a really good quality wash in that 2 to 3 minutes. So if you want the back, great. Pull around the side, you get free vacuum clean, you get access to a free vacuum cleaner, whatever. But most of the time, those people just pull onto that belt, they're back on the road in 2 to 3 minutes. So if you take a really good business and then you put it in a really good location, what I found interesting was, as you guys may know, we do a lot of self-storage business, and a typical a good location for a self-storage facility is, when you're looking at traffic count, one of the things you look at is traffic count. You look at how many cars are going past a day, and when it's kind of what we look at is like a good exposure for a self-storage facility. You're looking at 15 to 25,000 cars a day going by. We're looking, some of our facilities, some of our car wash properties that we have either purchased or are under contract to purchase, you're looking at 25 to 70,000 cars a day. So when you put a really good needed business in a really good location and you layer it with a really good team, you just got the recipes for success. And back to your question about what makes this thing viable, what makes this thing a really good cash flowing business. Again, it's based on volume. you've got about 55 to 60% of your customers are on a monthly subscription basis. And then so you can run those subscribers, you can service those guys really well, and you can push high volumes through that car wash efficiently. I mean, it's based on monthly surcharge revenue plus, about 40 to 45% of a retail business.
Dave, I did check out Tommy's kind of website and stuff beforehand, and that was two of the things that I saw that jumped out. Was one, the subscription model, and then number two is they seem to be very, very tech savvy, right? And so those are the two things that I kind of noticed. How is that kind of setting them apart? Because typically, kind of the car wash that I go to, right, is the one that you pull in, or that I've gone to in the past, is that you pull in, you hand them your keys, you go inside, and you kind of sit there for an hour, right, and then you wait, right? That's a pretty big difference, or pretty big experience on the consumer end as far as kind of what Tommy's is offering here.
Well, and there are a few other good ones. There are a few other good ones that kind of focus on the retaining that customer, servicing them well, retaining that customer, put them on a subscription basis. So Tommy's isn't the only one that has this business model dialed in, but I would have to say they're up there with the best of them. They own some of these patents, and you're exactly right. They are on the front end of the technology, and I mean they're car wash geeks. I mean they sit in their back rooms and figure out how they can make the experience more efficient and better for a consumer coming through, getting on the belt and getting them washed. So that's one of the things we recognize quickly as well. It's like, wow, this is almost more like a technology company than a car wash, because they got this thing dialed in, and they hold some of those patents for some of that technology, and they've been awarded. Let's just say when you go to the car wash expo, everybody knows who Tommy's is, and they've made a real splash in the industry.
That's cool. How do you even value kind of a car wash? Is it just based on revenue, or what does that look like?
Yeah. So much like you would value, a multifamily apartment building, or, you're basing, you're looking at your NOI or your EBITDA. And so one of the things that really attracted us to this space was not only the cash flow and not only the business model and seeing how lucrative it was, but we quickly recognized that this is a space that the institutions and private equity firms are looking to get some traction in. They're looking to take sizable positions in car wash. And then one of the things that they're challenged with is this is really a fractured industry, with the number one car wash in the industry only owning about 5% of the industry. And so it's hard for an institution or a private equity firm come in and take a large position where they want to write 50 to $100 million checks, and that's as a starting point. And so it's been a challenge for them to get a real foothold in this space, although they want it bad, and they want it for some of the same reasons we want it. Number one, cash flow, recession resistance. Private equity, Wall Street, they love the subscription model, the monthly recurring revenue. I mean, you don't have to look any further than Netflix or some of the subscription model. I mean, like when the earnings report came out, it didn't matter that they lost $100 million. What mattered, I'm talking about Netflix. What mattered was if their subscription base was going up, and if they got another 50 million or 5 million more subscribers. So Wall Street loves the subscription model. So one of the things too that attracted us to the space was we saw the appetite from Wall Street and private equity firms trying to get into this space. And one of the things that we found was when you have, so let's say 3 to 6 or maybe even up to 10 or 12 car washes, we see some of those packages trading at an 8 to 11 times multiple, 8 to 11 multiple, 8 to 11 times EBITDA. And so the other thing that we've seen though is when you get to 20 plus, when you have 20 well-run tunnel car washes plus, you get into that 20 to 30, 20, 25, 30 range and up. We've seen those multiples go up to 20x. So 20 times EBITDA. And we've seen that the last 4 that traded that were more than 20 car washes had traded somewhere around that 20 times EBITDA. And so it was funny because we were having this conversation, and a couple of weeks later, the Wall Street Journal put an article out, there was an article in the Wall Street Journal that talked exactly about that. In fact, if any of your listeners, if they want, and you guys can talk about this at the end if you want. You were asking about some kind of resource that we could send out. If we have that Wall Street Journal article, so if you guys want to see it or you guys want to share it with your folks, I'd be happy to send that to you.
Okay, perfect. Yeah, that would be fantastic, Dave.
So it talks in there specifically about PE appetite, and that they're paying around a 20x multiples on these car washes. Their appetite is quite robust for car washes right now.
So what that article is talking about is kind of they're out there trying to acquire some that are pretty large. You've got 8 now. You're picking up 50. How big are kind of these bunches that you've been able to pick up over the last couple of years? Is it 1 or 2 here, 10 here? What does it look like?
No, so the lots, we're picking up the lots on an individual basis.
Okay.
We're going into the market. We know what makes a good site. One of the things that we found was typically when you see a Chick-fil-A spends a lot of money to do research on a market. Yeah. Typically, when you see a good location for a Chick-fil-A, that's pretty good retail location for a Tommy's Car Wash. So what we did is we found a very active Chick-fil-A broker. His job was to find these locations for Chick-fil-A, and we brought him on, and he's been able to find a bunch of locations for us. Recently, we did a tour. We did a kind of investor tour. I love getting together with investors of ours, and whether that be for our annual barbecue or there's been times when we did kind of a hangout in Belize or Florida. Last year it was Florida, but we love getting together with investors. We recently just did a tour down in San Antonio where we have that market nailed down. We have it's reserved for us. We have the rights to the San Antonio market, and so we did a tour down there, and we showed them the lots that we're buying. One of the things that became very obvious, these lots were anything but average. Tommy's puts this thing out where your average store will be they'll do $2.8 to $3 million in revenue in a year. And so average, all right, cool. Well, some of these lots that we looked at, one of them in particular was it was within a block of one of the top 5 producing Costco's in the country. Just a really, really good area. One of the others that we drove to was within a block of the top 10 Chick-fil-A's in the country in terms of revenue. So, I just think if you put those 3 in a blender, number one, great product. Everybody ever talked to, whether it was a first-time user, whether it was a monthly subscriber, whether it was a franchisee, whether they had any Tommy's equipment, everybody just gives you a giant thumbs up. So great product. Now you got to put that in a great location. Now you put that, wrap a great team around that to run the business. You put that in a blender. I mean, it just, you got a recipe for success. And one of the things that we found is this team, many times you'll see Tommy's owners treating it a little bit more passive. Like you'll have a business owner that's got a very successful business career. He's kind of, his business is kind of, he'd build them to where they can kind of do their thing, do what they do, produce good revenue, whatever. And then he'll venture off and do this on the side. He'll build a Tommy's, and then he'll have a bunch of other stuff going on. One of the things that we've found is our team is Tommy's. That's all that they do. Our operations team, they're immersed. They're doing Tommy's car wash, and that's it. That's the only thing they got there on their agenda. How can we run this store better? And what we found is we can acquire these operational car washes and take it from that sort of passive owner and put our team in there. And we've seen some significant growth. I'm talking like 30% growth in subscribers in as little as 3 months. And so there's big opportunity, not only in, finding a desirable lot and building a Tommy's on it, but there's also a big opportunity in purchasing a fully operational car wash from one of those sort of passive owners and really taking it next level.
How much does one of those cost to purchase, and then how much does it cost to just build out? Yeah.
So we've had a range. So to build one, including the land, when you take a desirable piece of land, you're probably looking at $1.5 million to $2.5 million and up for the land, including the land. When you're talking an all-in build cost from start to finish till your first car moves in, goes down the belt, you're talking $7-ish million, $7.5 million. But we've purchased just north of 10 million already. And but we've done it very strategically. Let's say there's a Tommy's Car Wash in a location where the owner doesn't have the bandwidth or the appetite or the energy to build out that market. He's in a great market. He's got one Tommy's location. If you're in a great market, in a big MSA, you can't just build one Tommy's Car Wash. You got to build out that market. And so, let's say you get an opportunity to buy out, and you get an opportunity to buy a location, but it's very strategic in that you're also taking the rights to that market or that MSA. So we've made some acquisitions that were like that, not just for the car wash, but we wanted that location. We wanted to take down that area and build out that area. So we've bought for 10 million plus, and then you got to think, well, okay, well you paid $3 million more than what it cost you to build it. Is that worth it? Well, when you look at all else that surrounded that kind of business model, it makes it worth it by a lot. I mean, one of the things that we were really excited about, and we wanted to, once we had this, the one store that we put under contract, we were in a hurry to get to closing. We wanted to close this thing as fast as we possibly could. Every day that we did not own it, it was costing us $3,000. And that was the way it was run before we got there. And before we took it up, 30%, before we took those subscribers up by a whopping 30% in 12 weeks. So yeah, we like to, we like to build from scratch, but if the opportunity presents itself and it's the right opportunity, we'll buy an operational car wash as well.
I was going to ask you, I firmly believe we're already kind of in the beginning of a recession here. Dave, what type of outlook does that niche or that market have if we are in a recession?
So I always look to history to sort of tell us what we can kind of expect in the future.
Yeah.
And so when I look back to 2008, 2010, the decline in activity, decline in revenues was in the single digits. So it was, 6 to 8% throughout that period. When you recognize what the margins are that you can operate these car washes in, it's like a rounding error. We're used to seeing margins in the 45 to 50% range, profit margin. So when you think about a recession as severe as 2008 to 2010, taking a cooling off to the tune of 6 to 8%, you can deal with that. So 2020, car washes were a business considered essential. They did not shut car washes down. So when you look at those two, then you can kind of get a feeling or a sense or kind of a vote of confidence, like, oh, okay, they went through those doing very well. In fact, business picked up in 2020 and through today. It was very good business to be in.
So Dave, where are you getting all this capital to buy and to expand these car washes?
Our investors are funding along with ourselves. We're heavily invested in ourselves, in our own product, but our investors, we've invited our investors to come alongside of us, and it's not, for the most part. I mean, we have some family office relationships, but for the most part, it's mom and pop investor. It's the investor that's running a construction business or has or even high paid employees, W-2, high income earners. But for the most part, it's mom and pop, middle upper income entrepreneurs and investors.
And what type of minimum investment are investors looking at?
$100,000.
And how do they get paid out?
So what we did, and the last time I was on your show, we talked about ATMs. I sort of talked about the model and how that worked. Yeah. You get out it's a 7-year deal, and you get paid out. You get paid out a fixed amount over that 7 years. We sort of modeled the car wash after that, except we made it even a little bit better in that. Well, let's back up a second. So we're all familiar with the sort of syndication model where it's a 70-30 split with an 8 pref, and then you hit a certain waterfall. Sometimes you'll have it go to a 50-50 split after a certain IRR or something like that. So one of the things, and this came out of having conversations with the team. We're like, okay, this is a new asset class for us as of 2 years ago. This is a new operations team as of 2 years ago. How can we, and there's development, so you got all these perceived risks, we were confident in the team. We knew that the business model was sound. We could look back and see all of the other Tommies and see how most of them, how those were performing. But there's still, you got development, you've got all those things that were perceived risks or in some cases real risks. So we looked at each other and we said, okay, how can we de-risk this thing? And so what we did is we built a model saying, okay, the investors get 100% of the cash flow. We've got plenty of other asset classes that are providing us the cash flow that we need. We can be patient. We don't need the cash flow. We'll give 100% of the cash flow to our investors. That reduces risk, and we'll wait for ours till the back end. So what we did is we sort of modeled it after ATMs, after the ATM structure. So we said to the investors, we expect this will be a 5-year deal. In that 5 years, you'll make 1.75x. So if you invest $100,000, you get $175,000 back. You get 100% bonus depreciation at the end of 5 years. We're projecting at the end of 5 years. It's actually, you get the 1.75x or 175 on your 100 first. And whether that goes the full 5 years, okay. Or what we feel is much more likely is in 3 to 4 years, maybe 5 years, but 3 to 4 years, we expect to sell. We're looking at, we're building this business to where we would be sorry to have to sell, but that we can't afford, but we'd be crazy to keep. You know what I mean? So
an offer you can't refuse.
we're wanting to build this business in a way that we want to keep it for 20 years and hand it to our grandkids. But, we realize that, when they're paying 20 times multiples on these things, we'd be crazy to keep. So that's sort of what we're building for. So, we're saying to an investor, the way this would look is you get 175 back, whether we sell in 2 years, 3 years, 4 years, or 5 years, you get your 1.75 first. And then behind that, the bank gets paid out for the debt portion. And then we get paid after that. So it's really a structure that I believe aligns us very well with an investor, takes a lot of risk out of the deal from, construction and operational risk. And it really puts them ahead of us. Now, let me make no mistake. I'm not doing this just for fun. And I believe, and I'm a raging capitalist. I believe that our patience will pay off. And I believe that we'll do very well on this whole thing. It's just that we're willing to defer and put our investors in front of us and making sure that they get paid first.
Well, Dave, to be clear, to clarify, on the exit, do the investors get anything? Are they just getting the 1.7x, or is there any share in the sale?
They get 1.75x, and then they exit the deal. Our trade-off was, okay, we'll reduce the risk. We'll put a floor under you. We'll reduce the risk, but then you exit at 1.75.
Okay. Okay, let's talk a little bit about the bonus depreciation. You mind explaining that to Cameron?
Yeah. So you're asking for a friend. So here's how it works. So I'm going to give you a quiz. You may have heard this before. You may have heard me say it before, but there's something unique about car washes and gas stations. You know what it is? All right.
I don't know.
So I'll tell you what it is. So this is the only industry that I know of that the building gets depreciated at the same pace as the equipment. So let's say your equipment, you get 100% bonus depreciation. You can write it off. You don't have to do a cost seg or anything like that. You get 100% bonus depreciation in year one. In this case, with car washes and gas stations, you can write off the building in year one as well. And so it makes for a really aggressive investment on the tax side, not only on the cash flow side, but also on the tax side. You can take advantage of that building, and instead of taking that thing out 39 years to depreciate, or even if you do a cost seg study, pulling some of that depreciation in the first 3 to 5 years, you get 100% bonus depreciation on building and equipment.
Dave, last time you were here, you had mentioned that you kind of cover some of that as a strategy for some individuals in classes. I think it was like a weekend seminar that you're doing. Do you have another one of those coming up that you can maybe share with our listeners?
So I shared this. I shared this at the New Orleans Investment Conference. I talked about, part of my presentation was really when you want to become tax efficient. It's as simple as, and sometimes people get this idea that you're doing this shady stuff, and you're moving money around between entities, and you're trying to, you're trying to put this complicated structure around to kind of, shield money so the government doesn't see it. It's not that at all. Really what it is, it's doing what the government wants you to do. You're hiring the employees, you're building businesses, you're buying buildings, you're buying equipment, you're really stimulating the economy, and so the government rewards you in giving you that bonus depreciation. They're allowing you to get to the point where you're tax efficient. So really what we do a lot of, and this, back to the conversation about the guy with the liquidity event, we sold his business. Well, what we do is we really look at your income in sort of 3 different buckets. And of course there's more than that. There's more like 6 when you consider all of the different ones, but your 3 main ones are capital gains, ordinary income, like from a W-2 or your active business that you're working on and all that. And then there's passive income. And so when you can identify, let's say next year you make whatever, 500 grand, and 300 of that is from your active business that you're working in, on a daily basis. And let's say that 150 of that is passive income from investments you made, private money loans or apartment building rents, or some investments that you built over the last 10 years. And then maybe 50 is from some event, some sale or event you made a profit on something that you sold. And so we really just look at that in those three different kind of compartments or buckets. You got your ordinary income at whatever 300, then you got your passive income at 150, you got your capital gains at 50. And then all you really need to do is figure out, okay, what asset classes offset the tax liability on that specific stream of income, those specific streams of income. And when you can identify what those asset classes are, they give you the depreciation that will offset that specific kind of income. When you can shield those different income streams and you can get to the point where you don't have to pay tax on that income because of the way that you invest. I mean, put aside for a minute the income that you get from making those investments, and let's just say you make, you save yourself from paying taxes in the tune of 37%. That's a big deal, and that's how you create momentum. When you can make a lot of money, you can build income streams. And you can do it in a tax efficient way, and you can continue to do that year over year. Now you start that thing where you take the money, not only the money that you're earning, that 500 that you're making anyway, but now also the income that you're making from those passive investments that you made. And don't forget the tax savings from last year. You start kind of reinvesting them into more assets that give you more depreciation. That giant snowball starts growing quickly, and that's how you get momentum.
Awesome. And if you guys, I didn't hear if you have a mastermind or a class coming up, but if you do, I know you'll be promoting it kind of through your email list, right? Yeah, and if any of our lists, go ahead.
Yeah. So whenever we do an event like that, we have one of our events is only for our active investors, but we have plenty of stuff going on and plenty of communications with everybody in our database. So certainly be happy to have you guys have your listeners out for an event, and whether it be to go see an operating car wash and just hang out with a bunch of other really cool investors. One of the things that really, that not only I like, but my investors like, is when you can get together with 30 or 50 other investors in a situation like we had down in San Antonio when we were running around looking at different. We had, I believe three investors out of those 30 or 40 investors. We had 3 investors that had 8-figure liquidity events. We had guys who are running big businesses, and you sort of get to rub shoulders with each other and kind of, we got in a room, and I'll give you an example. We got in a room after we did the whole tour, and we were running around the city looking at different sites and really checking out the business model. We got in a room at a nice hotel and had lunch, and then we got down. We were talking about the business model. And I invited everybody in the room to kind of poke holes through the business model, or anything that they saw, anything negative that you could even think of, whether it would be an apocalypse or just financial meltdown or a nuclear disaster, whatever. Just put it on the board and we'll talk about it. And so then I asked for ideas, knowing that a bunch of these guys are business owners in the room. I was like, so if you had a Tommy's Car Wash and you wanted to attract new business, not only from the community, but maybe you wanted to attract the monthly subscribers from, customers that were already signed up at a car wash 5 miles down the road. and you wanted to track that business as well, what's some of the things that you would do? And you could feel the room light up. I mean, you could feel the energy in the room. I mean, the stuff started coming out. We're like taking notes, man. This is good stuff. And so just being in that room with those kind of folks, I mean, I always say, when you get good people together, good things happen, and you don't know when, you don't know how, you don't know what's going to happen. You just know that it will happen, and it happens every time. And I love it. So yes, whether it's on a tour to go see some car washes, whether it's an investor event that we'll put together and invite some of our vendors come in and teach on different asset classes, something like that. Be happy to have your crew and you guys. Be happy to have you guys. Just bring your whole crew with you.
Absolutely, that'd be great. But guys, if you're listening and you want to get on that list, it's info@therealassetinvestor.com. We'll make sure that we've got that in the show notes, and then also the website, right, is www.therealassetinvestor.com as well, where you guys can find more information. But Dave, once again, really appreciate you coming on, kind of sharing some insight on this kind of niche that not a lot of people know of. So appreciate you.
All right. It was fun. I love it.
Absolutely.
Yeah, thanks. And go make it a fantastic day.
Thanks, guys.
Thank you.